Okay, good night, everybody. Today is January 13th, 2016. I think this is gonna be the first weekly webinar of this year, right? Did we do one already? I'm not sure. Anyway, so I'm gonna tell you a little story first. So, this is what people think trading is all about, or life of a day trader is all about. So here's my little interpretation of what people think that a life of a day trader is, or story time. Yes, yes, yes. Sit down, cross your legs, cross your arms. Um, so this is what people's interpretation of a day trading life is gonna be. So you wake up in the morning, you brush your teeth, you take a shower, you change your clothes, you open those huge white doors to your fancy office with the fancy couch and 8 screens showing, big screen TV on the wall. You put on CNBC, and then you put your computers on. You walk outside, you grab the keys to your supercar, and then you drive to the nearest Starbucks. You hang out over there for a while, have some caramel macchiato, and come back in. You put your coffee down just in time for the market to open. You click a few trades, in and out, 2 3 hours, few $1,000s, and you're done. And then you jump back in your supercar, and you're out for the rest of the day. So that's pretty much what everybody think the life of a day trader is, right? Like that's how everybody want you to think that it is. That's how when people put out how to be a millionaire videos, that's how they want you to think that that's how trading really is, but it's not. And they want you to believe that it's all about the money and it's all about the riches and not the fame so much because we're not celebrities, but it's all about the money and that it's so easy to get up in the morning to stare at your computer for 2 minutes and just figure it out. Just figure out what you want to do and just make it happen and click a few times and always be 100% right with the right size and the right time and the right exit, and then you're out of there in a few minutes. And they want you to believe all this fake stuff about trading, and it's not so. It's not easy, and it's definitely not what you see. If you Google like trading stuff, you'll see all these books or all these DVDs or all these like posters. If you go through images or whatever of like people with fancy cars and fancy houses and chilling by their pools and trading on their laptop, and it's not that. It's great that it could be that. I mean, not saying that it can't. Not saying that you can't get to that stage where that's how you do it, but even when you do succeed and you're very successful at trading, you're not going to be sitting at your poolside with the laptop trading because it just doesn't work like that. You need a full set of equipment to do this job, you know. Um, but that being said, I think it's just a bunch of BS that people try to put out there, and they expect rookies, new traders, people who are just getting the business. They expect them to fall for it, and they do. They fall for it a lot. People spend thousands and thousands on books and DVDs and all this stuff, and do they learn anything? That's the point. Do they actually make money from these things that they do? When I did real estate, I had bought thousands of dollars worth of DVDs and books and stuff about finding properties and getting into real estate and what how I should approach people and all this stuff. And I mean, some of it, yeah, some of it helped because it just helped me to see a different aspect. But then it was basically me getting information on a field that I've never experienced or never been in. So for me, anything that they said sounded great. If they said that every house you showed a client to, they were gonna buy one, it sounded great because I knew nothing better off the situation. So it's the same thing like with trading. If you're new to trading and they come off and they say every 5 trades you take, you're gonna have 4 winning ones with my strategy. How the hell are you supposed to know any different if you don't know? So how are you supposed to be aware of anything else if they don't tell you? And if they feed you all the bullshit, then what are you supposed to differ from that? So I was just trying to sit back here and I was just trying to sit back here and figure out how to how to show people the reality of trading. And I'm sure that people that do trade understand the reality of trading, where you actually are sitting by a computer or some sort of a trading thing. It could be a phone, it could be a book, it could be something has to do with trading. Sometimes you're at there more than 12 hours a day. If I combine my time for the day that I'm actually not necessarily sitting at my computer because I'm on my phone a lot too, but my phone is like part of my life now. And so I would say it's definitely about 12 hours. And if you're not putting in that kind of time, then maybe you should. Um, and when you find, have you ever been sitting around at your desk or whatever, and you're playing with your computer, and you're playing with your strategies or your moving averages or even your platform, um, and you figure out something, like you have that aha moment where it's like, oh shit, I've never seen this before, or oh shit, I should be using this, or so like that's part of the reality of trading, where you come across stuff where you have your own moments where you can change something for yourself. So where was I trying to go with that? I'm sure I was trying to go somewhere with that. These questions are killing me. I'm trying to read too while I'm doing this. Um, da, 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 da. Right, and part of the reality of trading also, that obviously, I would, I don't know, how much percentage would you say people that are so successful that they're driving the supercars and having that sort of a lifestyle that I described before? I'm saying probably what, 10%, maybe, not even so much. Probably not even so much. If the percentage of failures are 92% of people that day trade fail, so that leaves you with 8%. And out of that 8% that succeed, is it probably only 1 or 2% that's actually living that kind of a lifestyle? So, and that's not because they actually trade to make money. That's because they have so much propaganda that they're selling to other people. That's how they make most of their money. And so, if you want to be a trader, an actual trader, and be successful at this, there's a lot of structure that you're going to need. And we could try to see where we should get some structure from. So, on my notes section, the story time's done. On my notes section, I have the reality of trading. I just switched that up. The reality of trading. So, I've kind of broken it down, and obviously there's a lot that was the reality of trading, the little, storytelling part. The key elements for trading success. When you're trading, you should be trading, and I'm just gonna go through them, and I'm gonna talk about them a little bit, and then we can have a little chat session afterwards. All right? So, some of the key elements for trading success. You need to trade the right stocks, and so can you guys? I can click over to my screen sharing. Yep. Okay, so I'll click over to my screen share. So the first one is, I put number one there. The trading the right stocks. So, if you have a small account and you're dealing with I don't know, say you're dealing with the margin of 20,000. All right, you're gonna have to trade the right stocks, meaning that you're gonna be wanting to stay away from stocks that are $300. You know, stocks like Google. I mean, you have to know what you can afford, right? You can't trade CMG. You can't trade Priceline. So there's certain things that you obviously would need to stay away from. So, in trading the right stocks, obviously your first criteria is trading the right stocks in your price range. Not now, when you even get into a price range, say you have a range of $20 for a stock, right? So that puts you, where would that put you right now in this day and age? A $20 decent stock. It's so hard to find a good $20 decent stock right now. Um, but say it puts you in this range here, RLYP, it's right about 20. Okay, say it puts you in this range. What you're looking for in finding the right stocks to trade is you're looking for a minimal daily volume of somewhere around at least quarter million. So on a daily volume, you'll see that this one trades an average, I would say about, let's say about 2 million shares, because that's 2.3 right there. So let's say about average daily of about 2 point something, which is good. So you're doing a minimal trade-in value of at least 300K, I would say, because you don't want to get into a stock that you can't sell your shares if you get in. You want to get into a stock that's not crazy liquid either. Like look at Microsoft, for example. The average volume on Microsoft is probably about 50 million or so, 45, 50 million. And so sometimes when you trade in stocks like that, it's a little safer. But what your problem is on trading something like this is the fact that you're fighting algos here. I would say on a stock that trades this much liquidity, you're probably dealing with about 70% computer bots you're trading against here. And the rest of the guys that you're trading about are like billionaires with huge hedge accounts or something. And then obviously you have the few day traders and whatnot that we make up nothing as far as percentage of this volume. Okay, we make up nil as far as percentage of this volume. So you're fighting against bigger things here. Things that can, not that I'm saying that you should not. Don't get me wrong. Not that I'm saying that you should not, but you should always know what you're up against when you're trading, or when you're trading stocks that are maybe too liquid for you. So what you try to do is find a stock. In finding the right stock, you try to find a stock that's mid-range, definitely trading over 300,000 per day, and something that you can sell your shares to, obviously, so that would give you your volume per day. And something that's not too liquid, because you just don't want to get in something that's just too liquid. And something that's medium liquid would be about 1 million shares or so. I would say 1 million, 2 million shares would be good for average daily volume for you to trade. And then obviously get into something that's in your price range, something that you can control. Don't go into a stock that if you have a small account and you can't risk more than 20 cent, 30 cent. Don't go on something that can pull on you 1 or 2 points, and then you get stopped out, obviously, because you couldn't handle that kind of a risk. So obviously always trade the stocks that are right for you, and it may not be right for everybody. Not because people like to trade Apple or whatever, or CMG or whatever. It doesn't matter. If it's not for you, it's not for you, and that's not a problem. It's not a problem as a trader to say, hey, I can't afford that. Okay, there is no shame in saying, look, I can't afford to trade that. All right, if you buy 20 shares of this, if that's what you can afford, and it goes up $1, you make what, $20? I'm just saying. So you have to be, and obviously if you went up $1, that's a great trade, but did it make you enough money to be a worthwhile trade? No. But if you bought a smaller stocks that was, say, $5 and it went up 25 cents and you could afford more shares, then it would be more valuable to you. So there is no shame in trading a stock that there's no shame in not trading a stock that is too much money for you. That's it. If you can't afford trading a stock like this, it's cool. You can learn from it though, right? There's a lot of knowledge that you can gather just from looking at how they work, or even testing on your paper account or whatever. But you don't have to trade something like this if it's out of your price range. So, and there's a lot of people that it is in their price range, but there is a lot of stocks that obviously in this price range will probably give you better range than this too. So there's a lot of key elements in finding the right stocks for you to trade, and finding stuff with liquidity is really what I'm into, and where I can share my I can give my shares away at any time that I want to. But I'm not fighting against too much computers, because they can they can check your stops out, and take you out if they need be. Um, Second thing on my list for key elements of trading success is having a strong technical foundation. And it's not because I'm a technical trader, but because the technical analysis part of it do work. There are a lot of fundamental traders that will look at a company like Apple and say, okay, well, they have, this growth and guidance and whatever, and they can trade like that, but it's not a day trading situation when you're looking at stuff like that. It's more of a swing situation or longer term situation. For a day trader, you're looking at this, and at this point here, when this was breaking the trend line here, is your EPS helping you at the situation here? Not really, because it's going down. So technically, this is what you should be looking at. I'm not saying that you have to be the best technical guy out there. I'm just saying, oh girl, I'm just saying that you have to have a good understanding of technical analysis to have a good foundation for trading. And do you have to know the names for all of these? No. Do you have to have a special name for all of these? No. Do you have to have the right name for all of these? No, I don't care. And I've said this many times, I don't care what the names are. But once you know that if a certain stock gapping up, say for example, just if a certain stock's gapping up in the morning, if it pushes at open, and you short the top, or if it's gapping up and it pulls, you look for a bottom and you go long. Or if you're looking at, for technical stuff, flag breakouts like this one here, like just saying, like that little breakout right there, and then your entries here, and your risk is down there. So if you're looking for having a strong technical foundation, it's gonna really help your trading a lot, where you're gonna see things and you're gonna know the things that really pertain to what you're doing. This is your business, and this is something you should know in and out. Do you have to know all about the company that you trade in? No. Does it have a ticker? That's pretty much all you should know if you're day trading. Is it moving? Is it liquid enough? Is there Momo? That sort of stuff. Is there news? Whatever. But do you need to know all about the company? Not really. Who cares? I trade stocks and I forget their names by the end of the day. Sometimes I try to remember when I put in my trades for the day, and I'll skip a few sometimes because I forget what I traded. Because all I remember was, all I remember sometimes is, oh, I made 50 cents, or I made $1, or that stock went up $3, and I'll remember that, and I'll completely forget the ticker sometimes. Because I don't care what the name is. I don't care what your name of your company is. If there's a ticker and I can trade it, I'll trade it. And for me, if there's a ticker and I can trade it and it has a technical reason for me to trade it, I'm in there. And I don't hesitate to trade a technical breakout or fail or anything. So having a strong technical foundation is gonna keep your your trading secure a little bit more, especially in an insecure world like right now. Not an insecure world, but an insecure uh, if you were a fundamental trader right now, if you were a pure bullish trader right now, if that's all you learned and you weren't a technical trader right now with the market pulling down, you would be crying. And there are a lot of traders out there that are crying right now, and a lot of big people that are crying right now, because all they do is they perceive the market going up, up, up forever, and they don't consider the fact that stuff breaks down and they come down. Not that they're failing, but they do come down. So when a up trader is watching Apple here, right, and they see an uptrend and it's making, well, this isn't actually a high or low, it actually came down here, but in a case like this, when it pushed up here, made a new high, and they played this breakout here, right? They played that breakout there because a lot of people trade that way alone, right? So they played that higher day breakout right there, and they're long. And when it comes down to a situation like this and it drops, they have no idea what to do with it. A lot of people don't understand. Can you see the charts now? Shouldn't you guys be seeing the charts all the time? You weren't seeing the charts all the time? You weren't seeing the charts all the time? Oh. G could see it. Michael was seeing it the whole time. Terry, take another drink. You have to switch your tab, Terry. See, everybody's seeing it. Look, I got 58 people today. This is my, like, a record-breaking number today. I saw 59 just now. Woohoo! Alright, so we're making progress here. Okay, Terry, yeah, you had to hit that screen sharing button, so you were staring at my notes all this time. So, technical guy would see the fact that this broke down here, and he would know what to do with this technically, right? Because he would see, obviously, that it broke the low here, and then once it retested the trend line, he went in short. Now, if a person was not technical and they were all fundamental, would they see the same thing at this point here? Probably not, right? They would be looking more at like a daily chart to get a daily reversal, and if you were totally fundamental here, you'd say, well, this is crap and I can't trade this. But you can trade this as a day trader because you know that there's a lot of points in this chart where you can find a long or a short section that you can trade. Obviously, you could have traded that long right there. You could have traded the short. And there's tons and tons and tons of areas on this chart, like a perfect double top up here. Not that I'm seeing it when I was trading, but I can see it now, obviously. The perfect double top up there, the break of the trend line over here. I mean, there's tons and tons of technical and reasoning to go long or short on this chart. Obviously, looking at it hindsight like this, it's kind of like, hey, you know what? Anybody could see it now. I mean, the chart's not moving and we're not live, so alright, so fine. So then, it's not that you know, I don't trade in hindsight. I'm not gonna say, oh well, of course you should have seen this double topping over here, and you would have known to short it. You know, I don't trade like that. I mean, but when you guys do see me take a real trade live, though, I do talk a lot about why I took stuff. Like even with the like today when I did the NHTC, it was purely a technical breakout. That was it. That was all I was trading there. And obviously there wasn't much else to trade on it, but the fact that it broke the flag there, and that's when I took it, 2160, and I sold at 22. And when I did that, Solar City was purely technical also. This one broke the same flag here, right there, to the upside. I got in 42.35. I sold 43.35. So even in a market where it's bad and you're just sitting there, you can still scan for stuff that works. When I did the UVXY right at the end, it was just purely technical too. I mean, so it's just a matter of finding your niche and technical analysis, learning your candles, learning your setups, learning your flags, your breakouts, your double tops, double bottoms, stuff like that, channel trading, all of that. It's gonna really put you in a different ball game. And oh my god, I have 60 people. Yes. All right, so this is gonna be the best. So technical analysis is really gonna change your game a lot. And you know what the thing is though with technical analysis? Nobody could fool you on it. Nobody can fool you on it. There is a perfect entry area. I'm not saying that it's going to. I'm not saying that it's gonna be perfect all the time. All right, but on a technical chart or formation like this flag breakout, right? There is. And nobody, you don't need a person to tell you. You don't need somebody in a room to tell you. You don't need, you know, anybody looking over your shoulder or anything. In a flag breakout situation like that, and you have a couple points where it should be your support As far as this was a higher low here, so you follow that trend to the upside, and you take that trade there to the break of the upside here, the flag breakout here, and then you follow here for your stops, and that's your stop area here under this line, and that's your entry. And the cool thing with knowing technical analysis is that you don't need anybody else. Um, you can find these trades, and it's not like these trades are mysterious and they're hiding somewhere. All of these charts are available to everybody else. As long as you have access to a platform, you can see these charts. So what you need to do is you need to understand that when you see these charts, when you see these patterns, when you see these formations, you need to be able to jump on them. You need to be able to spot them. And so what I like for people to do is to see the entire thing. You see, like how I have after hours here, and I have after hours here. I don't have it looking like, and not saying it's bad, but I'm not looking at a 1 minute, 1 hour chart. I'm not looking at this alone, because this alone here is giving me a scalp play, but when you open it up, you can see the entire way. You can see what's going on. If I was looking at that little section alone, did I know that it was breaking out of this high? Did I know that? Did I know that it was tapping that high over here? No. Right? You saw that double top in there? So there's a lot of things that when you trade, you know, just even though, okay, you want to see your charts, and maybe some people say, hey, I want to see my candles clear. So yeah, use your candles. If you see a formation, like if you see a formation coming up like this, right? And say, okay, well, Barry, I can't see these candles clear. I want to be able to get into it. So when you're scanning, and you see a pattern that you like, then jump back on the 1 minute. Then in that case, jump back on the 1 minute, and then focus in on it a little bit more. If that's the chart that you want to play, if that's the technical, the technical formation that you think is cool, then jump back on it. And so now, and you already know that, okay, well, hey, I'm looking at you're only seeing this part of it, obviously, right? You didn't see any of this. So you're saying, okay, well, I'm seeing that I got a flag situation going on here, right? So obviously this is a flag. That's your pole. That's your flag, right? So this entire thing here is your pennant, right? Everybody sees that. So when you see this setup here, and you're going, okay, well, you know what I gotta do? All I gotta do now is bring this into my 1 minute now, because I was scanning with my 15 minute or my 5 minute or whatever, but I'm scanning only to find a chart with the right setup. Now that I've found the right setup that I want, okay, maybe I'll put it on my 1 minute now, and then maybe I'll draw these two lines here. And so when you were looking at it, maybe you only had these 3 points here to work with, and this whole thing didn't happen yet, right? So then even when this one popped up here, you said, oh wow, look, it's breaking out of the flag. But no, because you're on a 1 minute. So you see this candle over here poke through, but it never closed above your flag, right? So that's not a technical breakout, is it? It's a technical fake out. So you wait for it to come and close above your flag. So in this candle here, if you bring it in really close, you can see that this exact candle here, this guy, that guy, actually closed above the flag. Now, if you take that position in any one of these candles that are over it, then that's your entry. Any one of these candles over it, you already caught the flag breakout, and then you put your stops. Being that you have, I don't know what moving averages you're using, but I use moving averages a lot. That white line is the 8 moving, the red line is the 13, and this big line here is the 50. So in this case, if I took this trade over here and I would want to stop, I'm using my 50 as a stop. Or if you didn't, you can use the same one that I was showing you before, where you know that this is a higher low, and you could use down here as your stop. But in this case, this trade here has too much range. So you're looking at 36, 35. So what is that? 37, whatever. Say 37.50, just to make it even, so you didn't even catch the bottom. say 3750, and you have to risk the 3650, that's too much, right? So you're looking in between that, and you'll find that your 50 EMA is sitting right there. So why not use that as your stop? And ultimately, that line right here should not even be broken back to the downside anyways. So you could even use that as your stop, because that line right there technically should never be broken back to the downside, or it negates the entire breakout. So as far as the technical thing is, that's how you should be scanning. You should be scanning in a wider time frame, and and then once you find a chart that you like for a reason that you like, say you were scanning Solar City and you saw this little setup here, so you saw it on a downtrend, and maybe you have a couple side charts up and you want to put it on one of your side charts, and you draw those two lines, and the minute it breaks out, you know that you have a trend reversal. So you don't know where the bottom is. It could have gone all the way down here until it finally, like hit a bottom and then came back up, but you would have had your line on it, and you would have seen exactly where it would start to reverse to the upside. So just keep scanning for stuff, and then once you know your technical stuff, it's going to really help you be able to jump on something right away. As soon as you see it, you're going to say, well, I know what that looks like. That looks like a double bottom. That looks like a double top. No problem, G. And so you'll be able to spot them a little quicker. Like on this one over here, if you look at this chart real quick, there's a whole bunch of different information. Technically, this chart telling you right here. First information you see is, yep, Ter. First thing you see is a double bottom right there. Okay, you see a range that this thing is trading in right there. Okay, now if it came down and now it's pulling in this area, this is already a bear flag. Okay, so you're already seeing a whole bunch of information that this is given to you. But the only reason why, and I'll tell you, I'm still in it, some of my shares, is because it filled a gap on the daily, and that's just a whole different reason why I didn't sell it. But obviously on a bear flag situation, it would be going further down. So it's just a lot of things that you need to spot out real quick, and it's going to help you further on down the line. Before I get crazy talking, because I can talk all night about charts, let's go into number 3. Trading pattern setup. Oh, well, I kind of just discussed that already, so good. On to step number 4. Trading with a strategy. Okay, well, you guys all know my strategy. I mean, it's no secret. It's pretty much I use the 12, I'm about to switch it up on you guys. The 8 EMA and the 13 EMA, and I usually do the 15. I've really been into the 5 these days, mostly so because blank screens. Mostly so because the markets have been so in and out that I have no screens. Yay. So I've just been hesitant to stay into trades too long. So I've been using the 5-minute really a lot. And I usually use the 15. And obviously if you use my strategy, say you were using my strategy on a 15-minute chart today, you would have been long on UVXY at this level. And not necessarily this level per se, but as soon as it gets over the 50, you'd have been long and you would have stayed in that trade because the MAs actually never crossed back down. So you'd have been in the trade for all the days. Can I go over my strategy in depth? Yeah, I think the 12-2, December 2nd video goes through the 8-13 strategy in depth. Right, guys? I've never actually looked at these videos after. I just post them up. I've never actually seen one of them after. Okay, yeah, 12-2. See, a lot of people know it by heart because a lot of people here use it. A lot of people here have watched that video a lot, and they love it, and they love using it because you know what? You know what the funny thing is, guys, with that strategy? It's a no-brainer strategy where You can be a rookie, you can be an experienced guy, you can talk to Terry on his free time, and it can be anybody that uses it, anybody, a new trader, an old trader like Terry. 30 years in the business, and I showed him this strategy, and he's like, "You've opened my eyes to a whole new thing." And he's been trading for so many years, and it's like he's never seen this before. And not that he didn't, but he was so much of a fundamental trader before he met me that he never cared about any of this technical stuff. He never even had lines on his charts before. And so when we started talking, and cause he used to just trade fundamental stuff based on companies and whatnot. And then when we started talking and we started getting into technical stuff, he's like, "Wow, you're teaching me a lot of stuff." And then once I showed him the strategy and he started using it, the thing is not that I showed him the strategy hindsight and he saw, "Oh wow, that's a great strategy," is when he started using it intraday. And then he's coming up with, "Oh dude, I just did 7 out of 7 trades with your strategy," or "I just did 2 weeks straight with your strategy alone." And so like it's proven where once you start getting into it and you start figuring out the little there are only a few points of it that fails. And if you have a safety net on some of the crossovers, it still protects you. With every single trade you take, there's a risk, obviously, but for the most part, the strategy works, and anybody can trade it, anybody can use it, as long as you get into it. So yeah, there is a video out there, 12-2 video, and you can see the strategy in depth. So it's the video with the most with the most views, because I assume that they've really been into that one. Yeah, just watch it after, I guess, if you want to. That's fine. Um, and so the strategy. Find a strategy that you love, that you are accustomed to using. That's maybe simple to you. That does not have to be my strategy, guys. It doesn't have to be. This is not like the holy grail of strategies, all right? It's the freaking holy grail to me. Because not that I came up with it. I mean, 8 EMA and 13 EMA were around forever. I put them together and I figured out some other stuff to it. I didn't invent it, but and I've never seen it from anybody else. I never got it from anybody else. But it's something that when I started, I told you guys I put every single moving average on my screen and I just started eliminating the ones that weren't. Yeah, Terry's back and he's saying, and it works, capital letters. So I just started eliminating the moving averages that weren't touching the candles at all, or that were way off the candles, or that were going through my candles. I started eliminating them. And then as I got closer, I started picking off the ones that maybe were touching the most points, where we're intersecting the most points, or ones that I felt like the candles were bouncing off of or getting rejected by the most. And that's how I kind of came up with the strategy. And then once I eliminated most of them, I realized that there was almost like a rainbow pattern. You know that guy that's a rainbow trader guy? If I wanted to years ago when I started putting all those things, I kind of almost had with all the different colors of moving averages on my thing. I actually kind of had like a rainbow wave of moving average, because in like a pattern like this, it would go like this and it would come up like this. And what you would see is you'd see wider bands here, and then as they come to a reversal area, you'd see all the bands come together and they'd tighten up. And then as you come over here, they'd get wider again, and then they would tighten up over here as a reversal, then they'd tighten up over here as a reversal. And even if you throw Bollinger Bands in here, you'll see that they're almost the same. Um, that they work almost the same as Bollinger Bands, where they tighten up on reversal areas and they widen up here on areas that they're not gonna reverse on. And so that's how the Bollinger Bands work, and they're the same situation for that rainbow thing, and there's a lot of other things like Ichimoku with the clouds and all that stuff. It's pretty much the same stuff. So let's remove the cloud. I used to use the cloud a lot. This Bollinger Bands. It's not a bad thing, but anyways. So finding a strategy is going to keep you in the game. Okay, that was number 4. Okay, number 5. Money and trade management. Obviously, it comes into play with how much do you want to risk on a trade, how much do you want to gain on a trade, money wise, and also obviously how much you want to how much how can I say this, not just the money wise, I should say. How can I put this differently? Because sometimes it's a trade where you take where you know that the money isn't going to be a lot, but you still end up taking it and you don't understand why, or you didn't understand how much risk you were risking to make a quarter of that which you were looking to gain. Sometimes you get into a trade and you're like, really? I'm trading this whole thing, or like a stock would move like all the way up here, and if you look at the bottom, it's like at $9, and up here it's like $9.20, and you're like, it looked like a parabolic move when you looked at it, and then you realize that this entire move was 20 cents, and you're like, it wasn't really a good trade in the first place. It wasn't a good setup. It wasn't. Click to the yeah, Michael, the risk reward. It was really not. Click on the screen sharing button on your top, and you'll see the chart, John. And so it wasn't really a good risk reward. And you don't sometimes you honestly while you're trading in the heat of the moment, you don't realize sometimes that you're trading a shitty chart, or you're trading something that has no risk reward factor to it, and then you're looking at yourself and you're like, wow, I risked 60 cents to make 20 cents, and then obviously you see this hindsight, you see this afterwards, because you don't see it in the heat of the moment, but you realize that, okay, if something has like no support or something, or the next support is $1 away, and you're trying to find the bottom somewhere on there between that area, you have to risk all the way down to the bottom spot, and your gain is 20 cents to the upside, and you're like, wow, you're kicking yourself in the head after, because you're down 70 cents, and when you were only trying to make 20. So it makes no sense. So you got to figure out always your risk reward, your money management. If you have a $10,000 account, how much? I don't deal too much with percentage. There are a lot of traders that would be like, oh, I gained X amount of percent for the day or whatever. I don't. I have a set goal, a figure, a number, a tangible kind of idea in my head where I want to get to, or where I want to lose. Because honestly, if you wanna trade, you better be willing to accept the fact that you're gonna have red days, or you better be willing to accept the fact that you're not gonna have the winning trades every single time. So when the trades do go bad against you, um, you want to know how much money you want to risk. And may that be a percentage? It could be a percentage. It could be a dollar amount. Say you want to make $500 for the day. You want to risk $150 for the day. So that you have a kind of like a 3-to-1 type average, where that's where I focus on. I'm not saying that that's what you should focus on, but that's what I focus on. I do like a 3-to-1. So if I have I want to make $1,000, I want to risk 300 on the trade, and then if it goes bad past that, if my support or my area of interest isn't far off, I'll obviously have a wiggle room on there, but I won't let it go crazy on me. So you gotta have a risk management situation where you're risking it. And if it's percentage, guys, it's percentage. It's fine. I mean, obviously, 1 to 3, it's a ratio, and percentage wise, there's a percentage for it. So if you have $10,000 in your account, 10% of that is what, $1,000. So if you want to risk $100 on every trade that you make, you're risking 1%, that sort of deal. So if you do it by percentage, and that's cool. If you're cool like that, to do it like that. I deal it with real money, and I like to keep it like that for myself. And it's not that I'm no finance major or anything. So I just don't care with it. If I feel like I don't want to lose $500 right now, I say I don't want to lose $500 right now, and I don't care what percentage that turns out to be. So that's kind of how I go about my risk management, saying that if I get into this trade, like with, say for example, like with my UVXY trades, you guys know how I operate with that. I really go in and I put it's usually about 50 cents to a dollar, depends on how much I want to risk, because I know on a dollar I can make back $3 or $4 on it. So it's always like a 3 to 1 on UVXY for sure. And when I'm scalping it, I only scalp between 25 and 50 cents, and then I'm out. So it's always a risk management that I can handle, and it's something that you should know how to deal with. Or and if you don't know how to deal with it, you need to figure it out before when you do realize it, it's too late. Because it's a big part of trading. Um, Understanding how much you can lose is more important than understanding what you can gain. And there are too many videos and DVDs and people out there that would tell you about the dreams of trading, and none of them, I've watched a lot of them, and not because I bought them, but just, I'm just obviously researching myself, but they don't tell you about the risk of trading. They don't tell you that you can lose all your money, your life savings, your 401, your wife's money, your kids' college funds. They don't tell you all that, do you? They don't tell you any of that stuff. How bad it can really be, or how you can get into a stock that gets halted, or a stock that like a buyer stock that has a bad FDA approval or something. They don't tell you about stuff like that. And when they teach you about, oh, put a stop in, yeah, but when you do a swing trade and you wake up to a stock that's 56% down, your stops obviously never got hit because that was midnight. So they don't tell you about the stuff that really can happen, and that's what I was trying to make this one about kind of like the reality of trading, the perception of the fancy lifestyle, but they cover it up, they mask it so well they mask it so well with all the fancy cars and the hot chicks and the yachts and all that stuff, and it's pretty on the outside. Don't say that it can't get there. I mean, you can trade very well and you can get whatever you want. This trading business is unlimited. Your money is infinite if you can get to that point where you can just push out trades and trade like a robot. I mean, money is infinite in this business, and but it's not gonna be that way right out of the bat and right out of the gate. And so I just wanted to kind of relate to people that it's not like how everybody perceives it. That's kind of where I wanted to go with this one tonight. So let me get into obviously a strong mental direction, which is stay focused. Don't get discouraged when you hit a wall. Find something to break it down with instead of banging your head against it. When you get into a situation where you can't go anymore, find somebody that you can talk to, a mentor, a friend, somebody. I mean, if you have a room that you're at, find somebody that you can say, hey, look, I took this trade and obviously I lost on it, but where did I go wrong? And if they look at it and they go hindsight, they tell you, well, obviously you should have seen this double top here or double bottom here. No, but you know what? That's a hindsight look, all right? Because I could see it now after the fact. But show me something differently. Show me a reason why I should have gotten out of that trade, or a reason why I should have never gotten into the trade. So not just when a person looks at a chart, they go, "Oh, well, you're stupid. You took that trade. Obviously, it was in a downtrend." Yeah, because you're looking at it at 6 p.m. when the whole trading day is done. Obviously, you can see that it's in a downtrend now, but show me from the day before this event happened. Show me from 2 days before that this trade wasn't good to get into. Show me why I should not have been in there in the first place. That's what I want to learn from. Not the day off after the event. I want to know 2 days before why I should not have been in it, right? So if a trader could look at a daily chart and they can tell you something about a trade, and you're and like, okay, for example, if you're looking at Apple right now on a daily chart, right? And you were trying to buy Apple down here on any one of these, I would have said to you, I don't like it here. Why? It's under the 50 EMA, and it's under the 13, and it's under the 8. Until these reverses, I'm not comfortable with taking this on a long side. Do I want to play a double bottom? Okay, if you think this is a double bottom here, and I can tell you right away, that's your risk, okay? If it breaks there, that's your risk and you get out. So in a way that I can tell you, hey, look, I don't see a reversal. But if you think that you find a double bottom here, trade it and risk that. And this way, you can click on the screen share, and there you go. So you can see obviously that there is no reversal here on this possible chart that you're looking at. In fact, it looks like crap. But if you wanted to play it and you wanted to play a possible double bottom here, that's on you. So as a trader now, I'm not telling you, oh well, obviously you should have seen this chart was going down forever. You know, I'm not gonna. I'm not in like a bashful or a condemning type of trader where if you make a mistake, I'm gonna say, well, you know, you should have seen that, or you're stupid, or something in that effect. I'm not like that. I would just say, well, look at the chart in a bigger perspective maybe and see where it failed, or where you failed to understand that it wasn't trading the way it should. If this chart's like that, you walk away. Unless you're shorting it, okay? You walk away. I mean, you find charts that are, and I have no idea, I'm just pulling any charts here. Obviously this here, you walk away. Why? A really huge bearish engulfing candle right there. The only thing this one's good for right now is a short cover pop. And that's pretty much it. It'll pop to this area here and then it'll pull again. So you just want to be able to address traders in a more open way when they ask you a question. And I get that all the time where traders ask me a question about their trades, and I have to tell them, and sometimes it's kind of brutal, and I hate doing it. And I don't tell them in a bad way or anything, but I tell them, hey, yeah, that chart doesn't look good, you know. And like I've had traders stuck in trades, and they're like, where do you see it going at? I was like, honestly, I still see it going down. There's no reversal there, you know, stuff like that. And it's hard when you have to tell people stuff like that, but it's true. I rather not lie to you. I rather not cover you up with the fancy truth about trading and, oh yeah, it's going to go up 600% tomorrow, because it won't. So I don't try to mask it. I just try to be honest about it. And a lot of traders get caught up in the whole just buy it and close your eyes. Eventually it'll go up, right? But more likely eventually it'll go down, because gravity's a bitch. So, anyways, that's your strong mental direction. You just gotta be strong about what you want to do. You just gotta be on point, and you gotta be able to say enough is enough. You gotta be able to say, look, that's enough. I'm done. Not that I've lost too much. When you've lost too much, enough is not enough. That doesn't apply. When you've lost too much, your enough is enough part is far gone, and now you're at a state where you're basically helpless, and that's when you panic sell, and that's when 2 days after you look around and you see the stock moved up on you, because that's where the panic sellers come in. When a stock dives and it makes a huge plunge, that's called panic selling. Like if tomorrow the stock opens underneath here, it'll cause a panic sell because it's already hit a really bad area here where the panic selling started. And if this drops under here tomorrow, it's going to cause a panic sell-off. And that's the people that's saying, I can't do it, I can't do it, I don't want to hold it anymore. And that's the people that's going to be involved in a trade like this. And I think Tree did that today too, where it caused a panic sell-off. So it's just caused, it's just where people get scared. Once this broke this area here, it was their last area of support, double bottom philosophers right there. Once it broke, it caused a panic sell-off. So you got to be able to say, I am done. You got to be able to say, that trade did not work. That trade did not work. Say it to yourself, because it's okay to make a bad trade. Not all your trades. Your charts are right here, buddy. Just click on that screen sharing thing up on the top. You got to be able to say that I am done with a certain trade. It did not work. I'm not a trading god. It's okay. I can take a losing trade. Got to be able to say to yourself that it's done. It's over with. I lost on that one. I'm moving on. The minute you cannot say to yourself, I've made a bad trade, is when you're going to be a bad trader. So be understanding that you will take bad trades. You will enter trades that don't work the way you want it to, that a pattern failed, that a news PR failed, that the market pulled 400 points and it couldn't control anything else. There are things that you cannot control. That happens, and some trades fail, and you have to be able to say as a trader, I'm done with it. It didn't work. And then if you don't say that as a trader, you will fail. You will be the guy down here when you should have cut it off here at your last resort for safety on this trade. And you're still holding here going, I hope to God it pops tomorrow. But you can't be a hope and pray trader. That don't work. So be able to be strong mentally and move on. Alright? And that's just for a losing trade. Obviously for a winning trade you gotta have the same way, where you want it to go as much as you want it to go. And let it go. Let your winners go. Don't hold them back. Alright, so it works the same way as making money. On the, well, obviously the losing side, you'll cry a little bit more, but it's the same aspect as far as making. Let winners run too. So that's the strong mental direction and your skill development. When you should be developing every day. Even in the room, what did I show AJ a couple days ago about? Was it Labu? Was it the biotech one, right? And LABL, right? And it does. We were just talking about no, not that one. It was Labu. And something else we were talking about, but I think this was one of them. Anyways, the biotech ETFs, and we were talking about them, and it was just like, and he was just saying, right, and he was just saying that he never even traded them, and he never even knew about them, and it's just like he learned. So everybody learned something. Everybody learned something. If you're not learning, I always tell you guys, the day when I stop learning about something about trading, I'm done trading. Because you have to learn something every single day. Not physically every single day, but in theory, as you grow, you learn and you evolve. Because if you don't, you'll be stuck in the back. And you don't want to be stuck in the back, because everybody's moving up, alright? Everybody's goals are getting bigger, everybody's way of thinking is getting different. There's a lot of algos to compete with now. I'm sure years ago, traders that traded didn't have a lot of algos to deal with or to compete with. But now there is, right? So how do you as a trader deal with that? Does that affect you as a trader? Does that affect certain stops? Does that affect certain areas? Does that affect trend lines? There's a lot of things that you got to factor in, because when a certain trend line breaks, like say in a situation like with SPY or something, when a major trend line breaks, it causes a major sell-off. And why is a sell-off? Not because of people alone, but the algos are programmed to sell. And if a certain area breaks, or if a certain moving average breaks, they are programmed to sell. So when you get into a situation like that where you're not willing to change, you get stuck in your old ways, and you don't realize that in trading now, in day trading, you're competing against a lot of algos around there. What? Bots, trading bots. Um, so you're competing against a lot of other things, a lot of other factors, programs. So you always have to be developing, and always have to be learning. And if you stop learning, you should stop trading. Sorry, but that's true. What else? That's it. So that was me and my little story time at the beginning, and some of the key elements of success, a successful trader. Um, and obviously there's a lot more elements of being a successful trader, but thanks, Terry. But I think that these can really grab a hold on you and help you to understand trading. So, anyways, table, it's open mic for anybody that wants to ask or comment or criticize. If you want to curse me out, don't do it. But you can talk. All yours. I'm gonna stop recording now, so you guys can ask any questions you want. Alright?